Hey, everybody, and welcome back for another deep dive. You know how it is. We're going to take a look at a topic that's got a lot of people, on edge these days: tariffs and what they could mean for your money or investments. We're going right to the source of all the chatter. Redditor stocks, to be exact. Let's see what these at-home analysts are saying, and if there's anything we can learn from them. So the big question on everybody's mind is this: if these tariffs, actually happen, which stocks are going to end up doing well? One idea that came up a few times is this thing called protectionism. Basically, if they slap tariffs on stuff coming in from other countries, it kind of creates a better environment for certain industries here in the U.S. They don't have to compete as much with all the foreign companies, and that gives them a chance to really take over a bigger chunk of the market. The folks on Reddit seem pretty excited about a few sectors, in particular steel, tobacco, and get this, sugar. Yep, you heard that right, sugar. Apparently, U.S. sugar cane plantations really depend on tariffs to stay in the game. Now, I'm not saying you should go out and buy stock in candy and cigarettes, but it does show you how tariffs can have these weird, unexpected effects on different parts of the market.
Yeah.
But not everyone's feeling so rosy about all this. Some folks are actually pretty worried about what could happen to tech companies, especially the ones that use computer chips. One guy even said he's putting off buying any new tech stuff because of this whole thing. And we're already dealing with this global shortage of chips. Tariffs could just make things worse. Take a company like Taiwan Semiconductor Manufacturing Company, or TSM for short. They're like the big kahuna of chip making, supplying everybody from Apple to Tesla. If tariffs make it more expensive for them to do business, it's going to cause a ripple effect throughout the entire tech industry. And guess what? Those higher costs, they eventually get passed down to us, the people buying this stuff. So yeah, maybe holding off on that new gadget isn't such a bad idea after all. Now here's where things get really interesting. Some people on Reddit think that banks could actually make a lot of money from all this tariff chaos.
The logic is a little bit twisty, but stick with me. Tariffs can lead to inflation, meaning the price of everything like groceries, gas, you name it, starts going up. And when prices go up, businesses need more money to keep up. So they go to banks and to borrow money. And those loans come with interest payments, which means more profits for the banks. One guy even mentioned a couple of specific banks, JP Morgan Chase or JPM and Aris Capital Corporation, ARCC. He thinks those could be winners in this scenario. Now, I'm not saying I agree with him or that you should rush out and buy those stocks. Remember, this is just one random dude's opinion on Reddit, not financial advice. Always do your own research before you put your hard-earned money into anything. But let's not get too carried away here. Another person brought up a good point. What if these tariffs are all just a bluff, like a negotiating tactic? Like a poker player trying to scare everyone else off, even though they have a bad hand. If that's the case, then it's even harder to figure out what's going to happen to the market. It's like trying to predict the weather based on a butterfly flapping its wings. You know what I mean? That's the big takeaway here. Tariffs create a lot of unknowns, and that makes it really risky to try and pick winners and losers in the stock market. It's not as easy as saying, oh, tariffs on steel, so steel companies are going to go up. We need to think about the bigger picture, the ripple effects, and the fact that these tariffs might not even happen at all. And speaking of ripple effects, let's go back in time for a second. Back to 2002 when President Bush put tariffs on steel. The idea was to protect American steel companies, but it kind of backfired, big time. American car companies like Chrysler and Ford suddenly had to pay way more for steel, which hurt their profits. This shows us something really important. Tariffs can have unintended consequences. Something that seems like a win for one industry can turn into a loss for another. And let's not forget about the biggest loser in all this, us, the people buying this stuff. As one wise Redditor put it, businesses don't pay the tariffs their customers do. So what does all this mean for you? Well, if they do go through with these tariffs, you could end up paying more for pretty much everything. And that new car or fancy phone you've been saving up for, it might suddenly be out of your reach. Yeah.
All right, we've covered a lot of ground here, and I know it can feel a bit overwhelming, but don't worry, we're just getting started. In the next part of this deep dive, we're going to dig a little deeper into some specific sectors and companies that might be worth watching. All right, so let's take a minute and think about what we've learned from these Reddit threads and what it all means for us as investors. So we've got some potential winners, like the steel industry, right? They could benefit if tariffs make foreign steel more expensive, less competition, But we got to remember what happened back in 2002 with those steel tariffs. They ended up hurting American car companies who needed cheap steel. It just shows you how tariffs can have these unintended consequences and create losers where you didn't expect them. Then there's the tech sector, especially those companies that rely on computer chips from overseas.
Tariffs could make the chip shortage even worse, driving up costs for both companies and, everyday people like us. And then we've got the banks. They might actually do pretty well if tariffs lead to inflation, prices going up.
Higher prices mean more borrowing, which means more money for the banks in the form of interest payments. So what are the big takeaways here? Number one, tariffs make the market a lot more unpredictable. It's harder to say for sure which companies will win and which will lose. That's why it's so important to diversify your investments. Don't put all your eggs in one basket, as they say. Number two, tariffs are a political tool. They can be used as bargaining chips in trade deals, and things can change really quickly. Trying to guess what impact they'll have on the market is like trying to predict the weather weeks in advance. It's almost impossible. And number three, even though some companies might benefit and some might lose, we can't forget that tariffs affect all of us as consumers. If they lead to higher prices, it's going to hit our wallets. Now, I know some of you are thinking, okay, that's all well and good, but what should I actually do with my money? Which stocks should I buy? Hold your horses, because in the final part of this deep dive, I'm going to share my thoughts on some specific companies that might be worth keeping an eye on this whole tariff situation. All right, so let's get down to it. What are some actual companies, that you might want to think about if these tariffs really happen? Now, remember, this isn't financial advice, just my 2 cents. Okay, always do your own research and talk to a pro before you make any big investment decisions. Got it. So first, let's go back to steel for a sec. If tariffs really do cut down on competition from overseas, those American steel companies could see a surge in demand. A couple of names come to mind: Nucor Corporation, NUE, and Steel Dynamics, STLD. They're both big players in the U.S. steel game, known for being, efficient and innovative. Now, what about banks? Remember, we talked about how they might benefit if tariffs cause inflation, prices going up. I'd stick with the big guys, ones that have been around forever, like JP Morgan Chase, JPM, and Bank of America, BAC. They've seen it all, recessions, booms, busts. They've weathered the storms, and they're still standing. But let's be real here. Investing in a world with tariffs is risky. It's like walking on a tightrope. You never know what's going to happen next. You got to think about what other countries might do, if they retaliate. The impact on global supply chains and the fact that these tariffs could be, reversed or changed at any time. So what's the bottom line? Well, tariffs can create opportunities for smart investors, that's for sure. But you got to be careful. Don't put all your eggs in one basket. Stay informed, and don't let fear or greed cloud your judgment. Remember, the market rewards those who think things through and have a plan. By understanding how tariffs work, you'll be in a much better position to navigate the choppy waters and make smart investment choices. That's all for this deep dive. Until next time, stay curious, stay informed, and happy investing.